Earlier today, the federal government, Justin Trudeau, proudly announcing what he called a huge win, a big tax cut for small business in this country. And by big, he means half a percentage point, at least at the outset. So let's try to shed some light on what happened today. Nick Moraitis is a tax partner at Fuller Landau. So, Mr. Moraitis, with respect to small business, and we know that the government took a lot of backlash, some from its own backbenchers, because they were going to actually make things a little bit more difficult for small business. Now they've decided to go the other way. So first of all, give me your overall impression of what you saw today. Is this a win for small business?
I'm hoping that it will be. Initially, we got a half-point decrease in the small business rate come January the 1st from 10.5 to 10, and it goes down to 9% January 1st of 2019. That'll help those. Obviously, it's an interesting reduction, but I think it's also a little bit backpedaling to appease business owners who felt that they were being targeted unfairly with all these proposals.
So this is the win. As you said, it goes down to 9% only in another year by 2019. But with respect to other things that the government is backing away from that they talked about, that Bill Morneau specifically had been talking about for the past almost 2 months now, the issue on, this whole idea of income sprinkling, what happens with respect to that?
Well, what they verbally have come out and said, and I think if I was watching what Morneau was saying, was that the rules are going to get tighter. The rules that were proposed were extremely complex, where you could find a founder of a business who's worked in it 50 years, is now in retirement phases as kids take over, be considered to not be eligible to the profits of the business. I mean, that's how ludicrous the idea was going. So now they're looking to narrow down what would be and what could be affected, and he seemed to suggest that a family member who is not working in the business at all will be targeted by these measures, because that's, I think, what they were initially looking to do. But I think they're going to back off a bit, where you have family members who are involved in the business at some capacity, that the old rules will continue to apply, where they can get their salaries and their dividends as usual.
Which makes it seem as if you'll have to qualify that sprinkling, if you will, to prove that it satisfies the conditions the government's setting out.
That's right, and it seems to be, I haven't seen any legislation, that if you're working in the business but you're not the president, CEO, and all that, you can still be a shareholder who receives a dividend and be taxed according to whatever it is that you make. But if you're a stay-at-home spouse, if your kids have nothing to do with the business, don't even know where the business is, then that is what is being targeted and what has always been used as the example that is not fair. It's that example.
Let's move on and talk about something else. Maybe you can put this in perspective as well. So the government's saying today they won't be moving forward with the change that would limit access to the lifetime capital gains exemption. What does that mean? Okay,
so the lifetime capital gains exemption occurs when an entrepreneur sells the shares of his business, and he's allowed the first $834,000 of capital gains will be not subject to tax here in Canada, and that same rule applies to any other shareholder of that business. So if he or she and her entire family are shareholders of the business, then each member of that family is entitled to that $834,000. The proposals initially came out and said, well, wait a sec, if you are the CEO and the founder of the business, we'll let you have your $834,000, but everybody else who is being targeted for the income splitting cannot get their capital gains exemption. Now they seem to be backing off because they're realizing that it's putting a lot of people into double tax situations, unfortunately, the way the law was proposed. It's making it extremely difficult to transfer, and this also applies to farmland. So if you sold your farmland in a corporation, you were allowed the same capital gains exemption, and that was well in the fishery business. So this really made it very difficult to transfer in between generations, and it seems that, according to what I'm reading, that they've backed off completely on this proposal. Therefore, all family members who are shareholders of a business or a farming company or fisheries company would be entitled to their capital gains exemption.
Okay, so the only other thing I would ask, typically, or not typically, but occasionally when the federal government makes a move like this, provincial governments follow suit. Is that an expectation here?
There would be an expectation, because it would make it extremely difficult here in Quebec, who has one of their own system. Most of the other provinces will simply piggyback on the federal proposals. Here in Quebec, we have our own income tax law. They will mirror those changes. They rarely go off of it on these major issues, so that we can get the same treatment of the same dollar of income, both federally and in Quebec.
All right, Mr. Moraitis, I thank you so much. Appreciate your time.
Thank you for your time. Thank you.
So there you go. That's what's in store for you, small business owners. I think Tommy was kidding when he was talking about this earlier on, saying rejoicing in the street. Not so much, but at least it's a step in the right direction and almost fulfills a Liberal election promise. So small business tax rates first going down gradually, 0.5% January of 2018, and down to 9% from 10.5% now in January of 2019.